markets. And the big debate today is about the global economy.
People are not feeling good about their economic prospects. These are anxious times. We need to do more to help countries in that distress get back on their feet faster.
Growth is set to strengthen in the near term in both MENA and the CCA regions. However, exposure to broader geoeconomic developments is adding to uncertainty.
Europe's recovery is falling short of its full potential. And more importantly, the medium-term outlook is no better. Europe has fallen behind.
Asia remains the world's engine of growth. It generates 60% of global growth, far more than its share in global GDP of about 40%.
The world has been very resilient. We have had amazing shocks.
I want you to assure us that it is inconceivable that there will be a major financial crisis in the next year or two, because you're completely on top of it.
Yeah, well, I mean, you're asking the impossible from me. I would say so far so good. That doesn't mean that we still don't have a couple of financial stability problems ahead of us.
What impresses me is how serious the discussion on the topics of the day is among finance ministers and central bank governors. I'm very, very proud we host these discussions.
Hello and welcome to IMF Today. I'm Amanda Walker. Once again, we're live from the IMF headquarters here in Washington, D.C. Now, we've heard a lot this week about the resilience the global economy has shown in the face of shock after shock after shock. But medium-term growth prospects are still the weakest in decades. Aging populations and weak productivity are just two of the challenges economies around the world are facing. In today's debate on the global economy, there was a lot of talk about trade, planning and reforms.
Development is never over. I think there is this idea that one day you reach it, and that doesn't exist. Every day you have to work for it. I think the rich countries have realized that, but for us it's also true. So just to convey more than we're not done. Every day we have to do it, and that's how we get the benefits. But as I said, it's very personal. It's very hard to generalize from one country to the other one.
Unfinished agenda is quite dangerous, and if we want to really live up to the commitment that we gave to our people, that we would make the financial system a lot safer than it was, then we have to follow through on the promises that we made and on the things that we agreed, and implement.
Trade is like a river. You put an obstacle, it goes around it. It is not stopping. It just becomes more expensive and maybe doesn't move as much as we would like it to move. And the sense that we are interconnected is right here, because you think of services. How do you put barriers to services to flow?
Earlier today, I spoke with the governor of the Banque de France, and I asked how confident he is that the soft landing has been achieved and where he sees interest rates heading.
Let me start with the good news. Inflation is abating. As you said, it's very spectacular. In the euro area, we are already at 1.7% for September. France, even 1.4%. And this has two positive consequences. First, it means purchasing power, and so it should support private consumption. And second, it gives us some monetary space. So the ECB started earlier than other central banks. We had a first rate cut early June. We were at 4%. We are now at 3.25 after 3 rate cuts. Where are interest rates heading? We will see. We will follow what I call an agile pragmatism, because we will be data-driven, but agile because, if necessary, we will probably go further in this direction of easing. But I think we can already say that the soft landing is here, that we will succeed. Better than what was feared 2 years ago. Remember, there were significant fears of recession. That said, it's a soft landing. It's not yet a takeoff, and European growth remains too weak. For France, it should be 1.1% this year, which is not bad, but which is not enough.
Let's talk about the Draghi report on European competitiveness. What's your opinion on its findings, and what steps is France taking to improve productivity?
The Draghi report is precisely designed to foster Europe's potential growth. And if you look at the last 25 years, the euro has been a tremendous success, obviously, but the innovation gap and the potential growth gap with the US has been increasing, especially in the latest years. So we support the Draghi report, and Europe's really need a structural acceleration. It should have a more integrated single market. It should have more financial muscle, what we call savings and investment union, to use Europe's private savings, and it should have above all more speed, more innovation, more simplification. This is a key message of the Draghi report. Let me perhaps stress a misunderstanding about the Draghi report, because as you are aware, there is a figure of 800 billion euro additional investment yearly. It's probably the right figure, but the message got by some readers was that it should be mainly financed through Eurobonds and public funding, and this is not in the report. There are many costless measures, many structural measures, which we should really accelerate on.
And what kind of reforms would you say are necessary for France and Europe to achieve sustainable long-term growth, particularly in the face of aging populations, shrinking workforces, that kind of thing?
No, you are right. Demography is a key challenge. It's, if I may, very often the elephant in the room. And it's not only for Europe, it's for many of our aging societies and countries. In the case of Europe and of France, we were very efficient in increasing the employment ratio. And this has been really a decade of successful reforms to increase labor participation, to increase apprenticeship, to reduce the unemployment rate, which was traditionally very high in my country, more than 10%. We are now at about 7%. We should go to 5%, which is more or less full employment. But here, the reforms are not only needed, they are already implemented and successful. Another key reform is pensions reforms, obviously facing this demographic challenge. It's politically much more difficult, but it happened also in France, like in many other European countries. That said, we must now, we face this demographic transition. We must also succeed in two other transitions, if I may, which is climate and energy transition. Europe needs renewable and non-fossil energy. It can include nuclear energy, and the other transition is a digital transition. And here we need more fintechs, we need more startups, we need more venture capital. This is linked to what I call savings and investment union, a stronger financial muscle in Europe. We have the resources, let us use them.
Okay, Governor, thank you so much for your insights. Many countries are talking about reforms this week, not just what they've done and what they hope to do, but gathering ideas and advice from their neighbours and nations around the world. For some, regional challenges can have a big impact at home. Egypt, for example, has been impacted by shipping disruptions in the Red Sea. Take a look at this image from the IMF's Port Watch platform. Compared to the same time the year before, income from the Suez Canal dropped by 62% from January to August. That adds up to about $4 billion US. So the decline deprived Egypt of a vital source of revenue. In fact, the IMF program with Egypt was augmented from $3 billion US to $8 billion in April, amid an increasingly challenging external environment. Joining me now is Egypt's Finance Minister, Ahmed Kouchouk. Thank you so much for joining us, Minister. So when you look ahead, what are the priorities for Egypt when it comes to maintaining economic stability and building growth?
Well, thank you first of all, for hosting me with you and for this opportunity. I think we are in the middle of a very important economic program. Yes, there are difficulties and there are external shocks, but I think also the economy is starting to show also resilience and to recover. We are seeing also strong inflows back into our systems from a very diversified base, which is one of the strengths of the Egyptian economy. We have remittances, we have non-oil exports picking up again, we have our even oil balance that will start improving with all the reforms that we're doing. You have also our service balance and tourism starting also to recover and to show improvements. And more importantly, we have our FDIs inflows, which is something that we are counting on, and we want to really exploit Egypt's potential there. So we have the great thing of the diversity. Yes, there are shocks, there are things that are maybe could have been better for us, but also we are counting on our diversity, our ability to bring more interest in Egypt by investors also and by tourism.
So you've talked about how to enhance private sector-led growth. Egypt obviously has a young population, and creating jobs and opportunities for those young people is crucial. How are you going to make sure that happens?
I think Egypt has a very good potential. It has a very young population, as you rightly said. It needs to be catered for. You need to create jobs for them, but also it's a big source also of growth and potential. As I said, we have the diversity, we have the location, we have the ability to grow by having young population. Now it's all about making sure that the private sector, domestic or external, can operate at potential, that they can have all the right ingredients for them to expand, including a competitive environment, including also having reliable energy supplies, including having a good infrastructure that we have been investing billions in over the last years. So it's about time now to really have a very ambitious also targeting of getting a lot of investment mobilization in Egypt, whether from the domestic or the external market. And I want to say that this is key for one thing, for those people, the young population, for creating jobs and for social protection. This is the best way to bring the best support to our population, is to have decent, productive jobs created for them.
Like so many countries across the world, high cost of living is a big issue for a lot of people. It's a very difficult time. And how can you make sure that steps are taken to protect the most vulnerable and also help people understand that change is necessary to bring about that future inclusive growth and prosperity?
We have a much better now. Information technology is a big transformation. We have now also a good foundation for social safety net, because we have a conditional cash transfer program in Egypt that is now expanding. We have 5 million households under this program. We are building a lot of supporting programs around it also to make people that have been part of this program more employable, more capable of finding a productive job in the future. So we have a good system. Now our job is also to create the right fiscal space for us to be able to give back in better services, because for the vulnerable there are good programs, but also we won't need to ignore the middle income. And the middle income, we need to have a better public services, education, health, and the rest of that. And for this we need a fiscal space, and that's exactly what we're trying to do. We're trying to do the right reforms to generate the right revenues so that we can remobilize that and re-inject that back into better public services for the middle income and the vulnerable.
Okay, Minister, thank you so much for your time. Enjoy the rest of the week.
Thank you for hosting me today.
Now, in her global policy agenda this morning, the Managing Director spoke about the need for the global community to work together.
We have ample evidence that when countries cooperate, everybody benefits. We also have ample evidence that when there is a higher uncertainty, the value of cooperation is higher. This is what we are committed to do: enable a peaceful and prosperous future for our members. For most of the world, soft landing is in sight. But people are not feeling good about their economic prospects. Everybody I ask here, how is your economy? The answer is good. How is the mood of your people? The answer is not so good. Families are still hurting from high prices, and global growth is anemic. We know that globalization has not delivered for everyone, and we must attend to the needs of those who have lost out. So here is the bottom line. The global economy is in danger of getting stuck on a low growth, high debt path. That means lower incomes and fewer jobs. It also means lower government revenues, so less investment to support families and fight long-term challenges like climate change. These are anxious times. Climate change and technology are unleashing transformations to the global economy that require global response. Only by working together can we seize the opportunities and mitigate the risks of these great changes.
One of those technological opportunities is figuring out systems for digital money. I asked Deputy Managing Director Bo Lee why cross-border payment systems are so important to countries.
Cross-border payments are important because they have both microeconomic and macroeconomic implications. In terms of microeconomic, it's about livelihood, about financial inclusion, about business opportunities. In terms of macro, it's about trade flow, investment flow, economic growth. So, for example, for a migrant worker, they need to send their remittance back home, and that affects the household's livelihood. For another example, for business, cross-border payment is about a transaction settlement, about whether they can grow their business cross-border. And in terms of macroeconomy, as I said, it's about whether we can promote the flow of trade and investment cross-border, whether we can promote economic growth. So given the importance of this cross-border payment, and also given the fact that there are still a number of challenges faced by this cross-border payment system, we see enormous opportunities in this area.
Tell me about some of those challenges.
Good. Well, there are at least three challenges as we see it. One is the speed. It often takes days or even weeks before a migrant family can receive their remittance from overseas. The second challenge is cost. The cost is very high. Right now, the global average of sending $200 remittance is 6% of that remittance, and that's double the level that is desired by the UN Sustainable Development Goal, which is 3%. That's a goal, but right now it's 6%. For some developing countries, it can be as high as 20% of what you are sending. That's the second challenge. The third challenge is accessibility, because many people, many small businesses, they still do not have access to the formal financial system for remittances. That also means a much higher cost and much less secure cross-border payment options for many small people and small businesses.
So how is the IMF helping countries strengthen their cross-border payment systems?
Well, we provide technical assistance. We also provide policy advice to many developing countries and emerging market economies. We typically, of course, countries and countries are different. There is no one-size-fits-all solution, but we typically advise three phases in terms of development. The first one we call prepare, the second we call build, and the third evolve. So let me very briefly touch on each phase. The first one, prepare, we typically advise and also provide assistance in terms of strengthening domestic payment system, such as a digital ID system, such as strengthening anti-money laundering and the countering of terrorist financing regulation, etc. Second, build. Based on the first stage, we can help the country to build a more inclusive and competitive payment ecosystem, such as allowing non-bank service provider to join domestic and also cross-border payment system, such as interlinking fast payment system between countries. And lastly, in terms of evolve, we typically advise utilizing the latest digital technology and other technology to upgrade the cross-border payment system. For example, the blockchain technology, the distributed ledger system, and also the latest digital money and digital payment technologies.
Okay, fantastic. Thank you for your time.
Thank you. Thank you very much.
Now, a lot of these meetings go digital through live streams, YouTube, LinkedIn, Facebook, Instagram, WhatsApp, and X. Overall, the IMF has around 30 social media accounts with a combined following of about 7 million people that can reach really specific audiences. But there are also about 10,000 people taking part in the in-person meetings. So how do you coordinate it all? On a recent Insider Voices podcast, IMF Today's Golda Bruce sat down with Karina Manasseh, the Deputy Chief of the Institutional Events Division of the Office of the Secretary of the Fund, and Miriam van Dijk, co-leader of the annual meetings matrix team within the Communications Department, to learn more about some of the challenges.
The meetings used to be over 7 days, and now it's basically 5.5. And within those 5.5 days, we still have to fit in over 1,000 bilateral meetings, over 300 official meetings. We have to be mindful of the schedule of our principals so they're not double booked. We have to be mindful of the schedule of the big high-level ministerials, such as the IMFC, the annual meetings plenary at DAR, and the G20, for instance. All of those groups come here because, as we were saying, we are the platform, right? And people want to come and engage in discussions here. And the scheduling and the resources has been really super hard for us to accommodate all those meetings within 5.5 days.
So basically about a month after the one set of meetings wraps up, the events planning for the next meeting begins. We organize the flagship seminars like the debate on the global economy, as well as all the usual press conferences for the flagship releases and regional economic outlooks. And this year we are expecting about 800 journalists in the building. We also have the Civil Society Policy Forum with at least 200 CSOs participating this year. We have the Global Parliamentary Network with around 150 parliamentarians coming to town. We produce a daily briefing of the day's events. Our publishing division is very busy publishing the flagships and the Rios and the annual report and streaming live events on imf.org, among many other activities. And last but not least, as you know well, Golda, the internal communications team works really hard to bring staff along and keep them informed throughout the course of the meetings.
Shout out, Common.
I'm a Common veteran, so.
And Golda joins me here now. Hi, Golda, how are you?
I'm so well, Amanda. Thank you for having me.
Absolutely. So you are in that internal communications department, and you've been on a mission to demystify the meetings, so to speak, over the last few days.
Yes.
What has stood out for you? What's been most surprising?
So that's an excellent question, Amanda. And I think the word is more fascinating and interesting rather than surprising. And the answer to your question is simply coordination.
Right.
There's a lot of coordination that takes place, that goes on behind the scenes. And I've just been at the fund for about 2 years or so. And before that, I saw the annual meetings from afar. I saw the spring meetings from afar. And now I get to sort of tighten the lens and take a look at the intricate details of what goes into planning these meetings. And there's a lot.
Right,
there's
it's
a lot.
Huge, isn't
Yes.
it? I mean, where do you even begin with unpacking it all?
Exactly. And thanks to my colleagues who I interviewed just a couple of days ago, Karina and Miriam, who you just saw, you know, they brought me into their world a bit in terms of the coordination. And it starts months in advance. Of course, it's led by the Secretary's department and supported by many other departments across the fund. But it takes into consideration everything from scheduling people to rooms to catering to just making sure that everyone has a space and a voice at the table. I mean, it's immense what happens here twice a year.
Yeah, and it feels to me, I've done a few of these now, that there are a lot of people here this year, and those people can't wander around aimlessly. They need a schedule, don't they? So it's a huge effort to coordinate that.
And every day there's this fantastic menu of events that you can attend. And there's something for every region of the world, every problem that countries are facing, every challenge. There's a space for that. There's a space to discuss that. And bringing that all together is no easy feat. It's not a simple thing to do. And to see it all come to life really is amazing. And to see it come to life from the inside of the organization is an honor.
Well, you've brought it to life brilliantly. So thank you so much for that.
Thank you so much, and thank you for having me.
Thank you. Now, today there was also a pause to celebrate international culture. This is what we can see now. And that's just part of the performance in the HQ2 atrium this afternoon. The Balafon West African Dance Ensemble showcased traditional rhythms and dance styles from the West African region. Now, tomorrow may be Friday, but that doesn't mean these meetings are slowing down. Delegates will hear from IMF Managing Director Kristalina Georgieva and World Bank Group President Ajay Banga at the 2024 annual meetings plenary. Then the Managing Director will join this year's IMFC plenary. We wrap up our Governor Talks series with a conversation with the Governor of the South African Reserve Bank. Our regional press briefings also conclude with the African and Western Hemisphere departments. And join us for our final seminar on monetary policy in a shock-prone world. Well, that's it for today. Thank you for joining us this Thursday on IMF Today. I'm Amanda Walker, and we'll leave you tonight with some of the wonderful work from our photography team, capturing the best moments of these meetings. See you tomorrow.